Hello, and welcome to another edition of CMS Forex News. My name is Fan Yang, and today is Monday, February 2nd, 2009. We begin in Australia, where a private gauge of inflation showed prices rising 0.8% in January. Seasonal increases in utility, drug, and transport costs put an end to 3 consecutive months of decline. On the year, prices were up 2.7%, also an increase compared to December. A measure of new home sales in Australia saw sales slide 1.7% in December, following a 4.1% decline in November. Home prices for the fourth quarter, meanwhile, were down 0.8%. The housing sector is feeling the strain as the economic conditions in Australia weakens the pool of potential buyers, and banks are lending less in the face of global credit crunch. The Aussie-Yen pair began the week extending its losses from last Thursday and Friday as stocks in Asia were down. A sense of risk aversion carried over from Friday's U.S. session, boosting the yen. The pair fell about 150 pips to test 55.50, but then saw a strong counter rally that paired most of the pair's earlier losses. The euro-yen pair faced similar price action as it fell to test support at 113.10 level, before rallying almost 260 pips to hit the 116 level. That put the pair above its open for today, but a late return of risk aversion brought it back to its range from Friday. The euro also had a strong rise against the pound, climbing 230 pips to test the level near 0.9080. Last week, the pair had been sold down to the tune of 600 pips, and today's move marked a 38.2% retracement of that fall. The pound was being pressured as Barclays had its credit rating lowered, and traders increased bets that the Bank of England will cut rates this week. Fundamental news from the UK showed that the manufacturing sector contracted for an 8th straight month. The PMI did manage to surprise forecasts and increased to 35.8 for the January period compared to the 34.9 in December. In the US, consumer spending fell by 1% in December, a record 6th straight month of declines. With the economy continuing to struggle and job losses mounting, spending should continue to be restrained going forward. Personal incomes, meanwhile, declined 0.2% in December, the 3rd straight month that incomes were down. The data showed that consumers were saving more, with the savings rate up to 3.6% from 2.8% in November. The ISM Manufacturing Index surprised forecasts and rose to 35.6 for the January period. New orders, production, and prices all rose. Of course, levels below 50 represent contraction, so today's data just shows that sector shrank at a slower pace than the record pace we saw in December. The demand for the dollar as a safe haven decreased today, which helped the euro climb higher following 3 straight sessions of declines. The euro-dollar pair found resistance at 1.29 following a 180 pip rally. The pound-dollar pair saw a strong 400 pip down move overnight, finding support at 1.4050. The pair bounced about 200 pips off that low to put itself near the 1.4250 level in New York trading. Last week, this pair was a strong gainer, but the pound's strength may be tested this week as the Bank of England gears up to cut rates by another 50 basis points. Tonight, Australia releases data on its trade balance and its central bank concludes its interest rate meeting with expectations of a 100 basis point cut. Overnight, Germany will release a report on retail sales and the Eurozone posts data on its producer prices. Tomorrow, fundamental docket is light, with one major release being the U.S. pending home sales. This wraps up today's broadcast. See you again tomorrow right here at cmsfx.com.